What's up, everybody? This is Jackson back again with another video. This is the sixth video, I think, on an educational series. This one is going to be going over EMAs and SMAs. Um, Once again, this is GNS Academy. The first video was about just a history lesson and basic questions about trading. The second video was about dojis and engulfing candlesticks. Video after that was about fair value gaps and then inversion fair value gaps. The last video should have been about liquidity, and now we're going to talk about EMAs. So we're building this brick by brick, video by video. Rewatch those videos before we get here. This was going to be a little bit more abstract and complex, but don't worry, you should be having a pen and paper out. You should be having your water. Make sure that you're ready for this. Watch this video a couple of times, and in the Discord I'm gonna have 2 or 3 videos that are related to this, okay, so that you guys get different perspectives. Quick rundown about me. I've been a day trader for 4 years. I've finally been profitable and consistent for a year and a half. But what I'm most proud of is I've been able to teach someone this, and in 4 months he was able to get a funded account and a payout, and 6 months later he has 500 accounts and has got another payout. So I wouldn't be teaching you guys this if not only if I could do it, but if I could teach someone else this. Many people have asked me to teach them and I wasn't ready because I wasn't ready. But now I know what I'm doing. I feel confident in what I'm doing, and most importantly, I was able to teach someone it already. So now I know if they can do it, if I can do it, you can do it. Okay, so grab your pen and paper. This is a Netflix and chill time. This is making money time. So let's go ahead and get into it. So EMAs, right? What we use in the market and what a lot of people use in the market are EMAs and SMAs. Okay. An EMA stands for exponential moving average. Now, the beginning of this is going to be a bunch of, uh, you know, information like what is an EMA, how does it work. But most importantly, at the end of the video, it's going to be about like how we use them. Okay. For a while, I didn't even know this stuff. I just knew how to use them. But of course, I guess I got the trading tism, so I had to look it up and all this stuff. So now you guys are gonna know what I know. Exponential moving average is EMA. Okay, it calculates the average of the last X amount of candles and their prices, but it weighs the most recent ones more heavily, because if we have the last 3 candles are big candles because of news, then those candles are gonna be more important. They're gonna be heavier in terms of weighing the average, right? Now the SMA is going to give equal weight to all candles. So let's say we have 50 candles, right? Going up and down and up and down and up and down. The SMA is going to give us the average value of those 50 candles. So we going back to, middle school, high school, how do you find the average of anything? You're going to get 50 candles, give me the numbers of their closing prices, and then divide by 50. So it just depends on the candles and what they're closing at. So um we'll talk about why that's important, but that's the difference between EMA and SMA. EMA is still getting the average of, let's say, 50, for example, 50 candles. EMA is going to get the average, but instead of counting the oldest, the 50th, 49th, 48th candle as the same weight as the newest candle, is going to be counting the newer candles a little bit heavier, because I guess it's more important technically. So we use EMAs and SMAs. They're just giving us an average of the price of X amount of candles. If you want to know the average price of 13 candles, average price of 50 candles, average price of 200 candles, we're going to use the EMAs and SMAs to give us an average, so that we kind of know, okay, is price going up or going down based off of the averages that we've been getting. So what do we have here? What are EMAs and SMAs? So we use in GNS Academy, we use the 13 EMA, the 50 SMA, and a 200 EMA. Based off the last slide that we went over, the 13 EMA would show the average price of the last 13 candles. Okay, The 50 SMA is going to show the average price of the last 50 candles, and a 200 EMA is going to show the last price of the last 200 candles. Okay, these are represented by lines on a chart. So if you look over here with the arrow, now you could change the color of however you want right here. Like I said, they could be shown any color that you choose. You know, my student Mondo does it one way. I used to have it another way. When I change my chart colors to this color, I change them to these. Okay, you could put it red, white, and blue. I don't care. Um, just make sure that you know which one is which for your chart. Okay, so right here, this is my 50, like the lighter gray kind of. This is my 13, the dark one, and my white one is the 200. Okay. Um, now they look like a line, right? But in reality, they're dots, and then the dots are connected. So it's connecting the dots. Excuse me, just finished eating. After every candle closes, a new dot is plotted on the chart. Okay. Um, and that dot that plot or that dot is based off the average X amount of the candles. So then the dots are connected, forming a line. So, for example, um, we have this candle closed, so then the dots put there, right? That candle closed, so the dots put there. That candle closed, so the dots put there. This candle closed here, so the dots put there. That candle is closed there, so the dots put there. So these are actually dots, but then they're connected, okay? So it's giving us kind of a visual of what's happening to the trend. You see how that is going up here? The dots are going up, or the line's going up, and then it starts slanting down. You notice how the 50 SMA right here is slanting down. So what does that mean? The average of the last 50 candles are going down in value, right? The average of the last 50, because it's 50 SMA. The average of the last 50 candles, when you see them going up, bang, 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 the line going up, the SMA going up, that means that each dot is going up and up and up. Which, what is that telling you? That the last 50 candles of the values going up. Okay, 200 EMA, you can see dot 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 dot. So pretty much every new dot, the oldest 200th candle is being removed, and then the new candle is placed in the new dot. Okay, we'll get more to that right now, but this is what it looks like. It's sloping up. What does that mean though? Look at the y-axis over here. Look at the price. It was at 6974 over here. Now it's 6975, 66, 76, 77, 78, and now it's over here like 7-8, right? So what is it telling you? From here to here, the average of the last 200 candles have been going up. Okay, it's just giving us a visual, and we'll explain why we like to use them. So put myself over here. So what do we have? How are they formed, right? If price is on a downtrend and a 13 EMA is currently above price on the 5-minute chart, okay, that means a couple things, right? So let's read that again. If price is on a downtrend, so it's starting to go down, you can see from here to here, it's going down, and the 13 EMA is above the candles. Look at the 13 EMA, the line is above the candles. And let's say this is a 5-minute chart. That means that the 13 EMA, line is the average of the closing prices, right? The 13 EMA is the average of the last 13-minute candle, 13 5-minute candles. So a lot of numbers, a lot of fucking words, but look at here. This is the 13 EMA, okay? The 13 EMA represents what? The last it represents the average of the last 13 candles. It could be the 7 EMA, 10 EMA, 12 EMA, 5,000 EMA. Okay, this is the 13 EMA. What does it mean? That means that it represents the last 13 candles, the average of it. Okay, the most recent part is technically the most important, right? That should be a dot, right? So then, and see how it finishes. The line is finishing right here with this candle. So what happens with the next candle? The next candle comes up and it prints. It goes up and down, finishes, then that line moves over. Okay, that's why it's like a dot. Is connecting a dot. Okay, it's being plotted based on the price. So the y-axis over here, meaning it's shown at the average price of the level from that calculation, that average of the last 13 candles. Okay, so this right here, I drew a line right here. The 13 EMA is finishing right there, or currently at there, right? Which, and if you draw one over to the y-axis, we're looking at 6982. Okay, that means that the average of the last 13 candles is equal to 6982.25. Okay, how do you get that? Well, let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so that's the 13th candle. Where is it at? 6985. Okay, give or take. It went all the way up to 6987 and it's closing at 6980. I don't know, we could do the math if you want to, but you have 6985, um plus 6983 plus 6982 plus 698 plus 698 plus 6 plus 6 plus 6 plus 6, all those, and then divide by 13. That's why we have it 698.2, right? 6982.25. Why is that important, right? Okay, well, if we start seeing the line start sloping down, the last 13 candles is showing that the 13 EMA is showing that price is starting to slope down. That means that the average was at 6983.5. Then it went to 6983.0 over here, right? Then it went to 693.25. And then it is finishing right now at 692.25. What is that telling you? Is going down. Okay, you can see the candles going down yourself, but the EMA tells us the last 13 candles, which is recent, only 13 candles, isn't 200 candles, it's 13, is telling us that it's starting to slope down. So it might be in a short term, downtrend. And you can see here the candles are dropping, right? Okay, so price is currently at 6980, but the average of the last 13 candles is 6982, then the 13 EMA will appear at 6982, right, on your y-axis. So that's what you see here. We close at 6980, right? But the EMA is at 6982.25. That's just because it's telling you the average between this candle and the 13th candle is 692.25. When the next candle prints and it closes lower, then that's going to be the most recent candle, and it's going to remove the 13th candle and now count this one and give you a different number. Okay, so each new candle removes the last candle and then adds the newest candle. And then a new candle is added, the last candle is removed. A new candle is added, the last candle is removed. That's how they're formed. Okay. So it's not really, don't think of it as really aligned, even though it is aligned. Think about it as like a dot, right? A dot. And then, so we'll visualize it more right now. Why are they important? Okay. So EMAs and SMAs will give us, EMAs and SMAs will give us a visual on the trend. So the higher the time frame, the stronger the trend. If we have a 200 EMA, that's 200 candles. Okay, so it's giving me the average of the last 200 candles. So if it starts to slope down, then that's pretty much telling me that for about 200 candles, the price has been sloping down. The average has been decreasing, so price is probably dropping. But if it's 13 candles, then it's a little bit weaker. It's still important the way it works, because if I'm doing a scalp for 2 minutes and I see that the EMA is kind of changing, then I could use that to my advantage. Okay, well, the 200 EMA is sloping upwards, right? So the last 200 candles are going up an uptrend. So my mind is, okay, we're in an uptrend. And then now I see the 13 EMA start sloping up. Okay, that means that not only the 200 candles are sloping up, but the last 13 candles are sloping up too. So that means I should look for some buys. Okay, we should be able to determine if price is on an uptrend or downtrend just by looking at the charts. Before we even talked about EMAs, we talked about what an uptrend is and what a downtrend is. Okay, so you don't really need EMAs to do it, but we'll talk about how we use them to make money and how it's really been saving us a lot on our trades, right? The EMAs and SMAs help determine the trend based off of X amount of candles, the last 13, 50, or 200, which is the ones we use. Mind you, I'm sure there's EMAs from 1 to like 500. So we use the 13, 50, and the 200 EMAs. We can stay with the trend or time reversals based off the EMA that we're using. That's why they're important. They give us a trend. So let's go over the 13 EMA. We went over it, right, just a little bit before. The dark line is the 13 EMA. The line is extended, it moves, and it grows based off the last candle and where it closes. Okay, so when the candle is right here and it closed up here, the EMA was higher. But then this candle came down and closed, boom, so the EMA dropped more because the average of the last 13 candles are dropping. So now it's dropping. This is because the 13 EMA is calculating what number the new candle closes, removing the old 13th candle and calculating the new average. So it's doing the math for us. Instead of us calculating, okay, so this new candle closes here. So now the last 13 candles, add them all up, divide by 13. Okay, this is the average. Okay, wow, we noticed that the average is dropping. The EMA will do it for us. Okay. If the lines start to slant down, that means that the trend is starting to go down, since a slant consists of calculating the average of the last 13 candles. You guys get that? So next we have the 50 SMA. The 50 SMA is based off of the last 50 candles. The lighter line over this is we have three candles, right? The 50, we have three lines, right? The 50, the 13, and the 200. Let's focus on the 50, right? This is the 50 SMA. The lighter line is a 50 SMA. As the line is extended, it moves and it grows based off the last candle and where it closes. So let's look at this candle. This is on the 1 minute time frame. This candle closed right there, right? At 69.80 again. Now look at the 50 SMA. Where is it at? 6983.25. Okay. But not only where it's at right now, but look where it was before. It was higher and now it's sloping down. So what is that saying? The average was of the last 50 candles was at 69.85 around here. But then look what happened. We can count 50 candles. 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 50. Okay. So now look where it's at now. 6983.25. So at 85, it was up there, and 83, it's over here, which means that the average of the last 50 candles has dropped. That could give us a visual mental note that we should be looking for sales because it looks like we're dropping on a downtrend. And then what do we have here? The 13 EMA. The 13 EMA is sloping down too. So we have the 50 SMA and the 13 EMA both slanting down. What is that saying? That the last 50 candles, the average has been decreasing, and the last 13 candles, the average has been decreasing. Okay, let's keep that in mind. If the line starts to slant down, that means the trend will start to go down, since the slant consists of the calculating the average 50 candles. Okay. And then same thing with the 200 EMA. Okay. So 200 EMA is based off the last 200 candles. So the white line is the 200 EMA. We have it pointed out here. Is extended moves and it grows based off of the last candle and where it closes. So what do we have here on the 5 minute time frame? We have the candle closing at 69.80, but look at the 200 EMA is over here at 69.63. Why is it down there? Because it's giving an average of the last 200 candles. There's not 200 candles here, but there's probably candles below over here. So you could do the reverse math, I guess. But 69.80, and then figure out what would be the lowest number, and then figure out how to get to 200. Divide that by 200. I don't know. That's like middle school, so high school SAT stuff. But essentially, the 200 EMA is going to give us the average of the last 200 candles. Okay, if you start seeing it sloping up like this, then that means that well, it was at 69.56 around here, and then now it's at 69.63. So it went up about, was that 7 points? The average of the S&P 500 has gone up about 7 points based off the last 200 candles. Since it's 200 candles, that's a lot of candles. And if the average is going up, then that must mean if the last 200 candles are going up, then that must mean we're in an uptrend. That's way more important than 13 EMA, in my opinion. So 250 are a little bit stronger than the 13. The 13 will give us a short term, okay, quick little snippet. Okay, the 13 AMA is slanting down. Maybe we're in a quick downtrend. But overall, the last 13 candles might be going down, but the last 200 have been going up. So we use them to our advantage. Now, if you're thinking what I'm thinking already, that means that these indicators are a little bit laggy, because we could start going on a downtrend, but the last 200 candles have still shown uptrend. The last 50 candles might be showing down. The last 13 candles might be showing down, and we might be in a downtrend, but the 200 is still late because it is still showing under because it's showing the last 200. So the 200th candle has to get removed, the new candle has to get put in. The 200th candle has to get removed, and the new candle puts in. The new candle's put in, and the last one removed. New candle's put in, last removed. So it's going to take a while for the 200 EMA to catch up to let us know, that it's starting to slope down. But if we can get all three of them aligned, which is called EMA alignment, then that could really help us out in our trades, okay? But just know that 200 EMA is going to represent the last 200 candles. 50 represent the last 50, and the 13 is going to represent the last 13. Okay. So let's put them together, right? The EMAs and SMAs are important indicators, which is why we want alignment with our trades and analysis. So these pictures are a little blurry. So we'll show the Discord right now and show the trades that we've taken and where the EMA alignment was. So first, let's look at an uptrend example, right? Let's say this is a 5-minute time frame. We have an uptrend. 13 EMA, 50 SMA, 50 SMA, and a 200 EMA are underneath the candles, slanting up. Okay, that means that the average of the last X candles continue to rise since they're slanting up. So what do we have here? The 13, I should put an arrow here, but the 13, the 50, and the 200, right? The 13 is slanting up. What does that mean? That the average of the last 13 candles was here, and now the average is slanting up. Now it's here. The average is here, so it's slanting up. What do we have here? The 50 SMA, this lighter color, is slanting up. Okay, what do we have here? The 200 is slanting up. So what is that saying? We have three things here, right? We have the last 13 candles slanting up, the last 50 candles slanting up, and the last 200 candles slanting up. So what does it mean? Probably that we're in an uptrend, okay? Think of a downtrend. What do we have here? The 13 EMA, the dark color, slanting down, right? So what does that mean? The last 13 candles was plotted here at X amount number, at whatever number, and then bam, and then bam, and then bam, and then bam. So if we could look at it here with our own eyes, we could tell not only that it's a downtrend, but that the EMAs are telling us that the last 13 candles are going down, are losing value, or are dropping in value, dropping in average. What do we have here? The 50 SMA, the gray one, right? The gray one, or this lighter kind of color, is slanting downwards too. What does it mean? That the average used to be up here and now it's down here, which is telling us that the average of the last 50 candles is dropping. What do we have here? The white colored. It's kind of hard to see, I know, but the white colored is going to be the 200 EMA. You can see it's starting to slant, right? It's a little bit slower. It's not as sharp, but if we know that it's starting to drop a little bit, then that gives us three things that we have. The last 13 candles have been dropping or going on a downtrend. The last 50 candles have been dropping, and the last 200 candles have been dropping. And what is the worst case scenario, right? Consolidation. So let's say we have something that looks like this, right? We call it spaghetti. We call it tangled. Look how the EMAs are kind of like tangled with each other. First off, look at the 200 EMA. It's flat. That's flat. That's not a slope like this. That's not a slope like this. It's flat. Look where they're all finishing to. Sorry. Look where they're all finishing right here. 1, 2, 3. The average of the last 13, 50, the 13, 50, and 200 candles are in the same area. That is telling us that, the averages of the last 13, 50, and 200 candles are all the same, which means that they must all be kind of hanging out around here. If the last 13 candles are right here, the last 50 candles are right here, and the last 200 candles, which is probably up and down and up and down like crazy for a long time, are right here. That's telling us that price really has not moved a lot. Okay, so if the 13 the consolidation situation, which is not an uptrend, not a downtrend, but it's the third way the market moves is consolidation. Um, the 13 EMA 50 and the 200 will be in between the candles, so not above them or below them, but in between them, looking flat. See, the 200 is looking flat, the 13 is kind of looking a little weird, and the 50 is kind of looking weird too. So that's what consolidation means, or it looks like. So I mean, that's pretty much it right there. That's the EMAs. Okay. What are they again? The EMAs are and SMAs help determine the trend based off the X amount of candles. Okay, 13, 50, 200. Which ones do we use? The 13 EMA shows the average price of the last 13, 50 shows the average price of the last 50, 200 shows the average price of the last 200. Okay, how do we use them? Now, if we are looking for buy setups, we need the EMAs to be underneath, slanting up. Okay. If we're on sell setups, we need the EMAs to be above, slanting down. And if the EMAs are flat and tangled, prices consolidated, and we should not trade. Are we going to trade? I don't know, but we shouldn't. Now, let's go back to here. What did I just say? If we're looking for buy setups, we want the EMAs to be underneath the candles, slanting up. If we're looking for sells, we want the EMAs to be above, slanted down. If the EMAs are going through it and flat and looking tangled, we don't want to trade. Okay, that is the whole point of this PowerPoint. Okay, I wanted to tell you guys and teach you guys what an EMA actually is, what it's actually calculating, but sum it all up, and what's the most important piece that I need you to understand here is that if we are looking for a buy setup, if we want to go for buys, we need the EMAs to be underneath. Okay. If we're looking for sells, we need the EMAs to be above. Okay. If we are looking for buys, we need the EMAs to be below. If we're looking for sells, we need the EMAs to be above. Okay. We need the EMAs to be out of the way. Okay. Now let's look at, let's finish here. Okay. Well, let's look at some examples here. Let's look at our trades. What do we have here? Look at our trade. We're looking for buys, and we'll explain why in another video. But this is a buy setup, right? We're looking for buys. Now, what do we have here? The EMAs are underneath, okay? And they're slanting up, but the EMAs are underneath. So we're looking for buys. What's going on here? The EMAs are slanting. The EMAs are slanting up, which is telling us that the average of the last 250 and 13, look how it's slanted up. The average of the last 250 and 13 EMAs are slanting up, which is telling me that the average of the last X amount of candles are going up. But look where they are. They're underneath, okay? Why do I want them underneath? Why do I want them out of the way? Because you will see, this is crazy phenomenon, but you will see the EMAs just stopping price. Why? What do you see here? Look at this. It acts like a little support, like freaking support and resistance, impossible to beat. Let's say you wanted to go for sells. What happens? You run into an EMA. Run into an EMA, it pushes it back up. You run into another EMA, another EMA, another EMA, it pushes you up. This is why we want them to be on our side. What would be on our side? Using them as like a trampoline to get out of our way. Stay out of our way, EMAs, because they will make you lose. Okay. So not only do we know how to plot them and how to visualize them, oh, not only do we know how to plot them and how to visualize them, but and what they mean, what they look like, but they need to be out of the way when we trade because they will make us lose. That's how strong they are. ICT has nothing on EMAs and their strength. Okay, we can talk about fair value gaps, inversion fair value gaps, taking liquidity. That's all very important and that all matters. But EMAs will just tear you up if you don't pay attention. So if I'm going for buys and I needed the price to go up, what do I need the EMAs to be underneath? If I'm going for buys and I need price to go up, where do the EMAs need to be? Underneath me, out of the way. Let's look for a sell example. If I'm going for sells, okay, see I enter here and I go down for sells. Where are my EMAs? Okay, above. 50, 213 are above, out of the way. What happens with price? Look at the candle, comes up and wicks it, wicks the 13 EMA. It's no coincidence. The EMAs are freaking unstoppable. What does price come do here? It drops down. And it hits TP. We win the trade. What does it do? Come back up to the EMA. Look up here. It comes up and taps a 50 EMA, 50 SMA. I don't get it, but just make sure they're out of the way, okay? But what is it also telling us? That it's starting to slope down. So the last 50 candles are starting to go down on a downtrend. Good, we're looking for sales. What do we have here? The 200 is starting to slope down just a little bit. So what does that mean? That the last 200 candles are starting to turn. Well, we have the 13 EMA, bam, it's starting to slant down really hard. So it's telling us that the last 13 candles are the value, the average of them is starting to drop. So those are three indications that the price is dropping. Let's look for a sell setup based off of fair value gaps, based off of liquidity, and which will start putting the pieces together very soon. But the EMAs need to be out of the way. If I'm looking for sells, where do the EMAs need to be? Above. See how they're out of the way? So when I go to hit TP and when I go win the trade, is this clear out of the way and I don't have to worry about it? Like that's the point of, the EMAs. Not only are they telling us the average, but we need them to be out of our way. Okay. Let's look for a couple more setups here. Some clean ones. So look at this one, right? This is kind of sketchy, right? So we end up winning, right? We have we can see here that they're sloping up, right? The 250 and the 13 are sloping up. So what is that telling me? Okay, so price is starting to go up, right? Especially the 250 is really important for long-term trends, idea of long-term trend, because As you can see, it's an uptrend, duh, right? It looks like it. You could just use your eyes, but the EMAs will help us just visualize and give us a little bit more confirmation, right? So we see the 200, the started slope up, which means the value of the last 200 candles, the average of them, are starting to increase. The 50 SMA, the last 50 candles starting to increase. The 13 EMA is really telling us that the 13 started to increase. Okay, so what does it do? Come down. Now it starts to slope up. We enter right here for buys. The 13 EMA is not in the way necessarily. Okay, right? We're going over it, so it's kind of underneath. The 200 is underneath, but what's going on the 50? The 50s above, okay? So this is not necessarily ideal. I didn't take this trade. Why? Because the 50 was still above, and it was before my TP, my end zone. So what could it have done? It could have respected the 50, and it bam fell down, because that's how freaking strong and scary EMAs are. Okay, but what did it do? It won. It hit my end zone, but then it came down. Look how I respected the 50 SMA. Look how many times I respected the 50 SMA. 1, 2, 3, 4, 5 times. This is why we do not want the EMAs to be in the way. But what does it do here is respect the 13, respects the 13, respects the 13, respects it a little bit, respects it a little bit. Respect is playing around with the 13. Okay. We do not want EMAs in the way. Okay. That's the name of the game. We do not want EMAs in the way. Write it down. We don't want EMAs in the way. If we're looking for buys, we need the EMAs to be underneath. If we're looking for sells, we need the EMAs to be above. We need them out of the way. Okay. Now here's an example of using them to our favor, right? What do we have here? The 200 is underneath, but it's slanting up, so uptrend. The 50 is underneath and it's slanting up, is uptrend. The 13 is underneath, but it starts sloping up, so it's an uptrend. Look how we are over it right here. We enter the trade right here and we're over them. They're underneath. What are they? Underneath. We're going for buys. Where are they? Underneath. What does it do? Come up, taps them, uses them as respect, taps it, uses it as respect. See how they respect the EMAs? And we're going for buys. So we're going for buys, and look how it comes back to it, but it uses it and bounces off of it to go up. Imagine we're going for buys and there are EMAs above us. Dude, we're going to be tapping it, tapping it, tapping it, tapping it, praying that we break through. No, 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 no. When we look for our trades, EMAs need to be out of the way. And look what it does beautifully. Fair value gap right here, taps it, respects it. Taps the fair value gap again, respects it, but is also respecting the 50 and the 13 perfectly. Perfectly. For look how many times it respects it. It's beautiful. Okay, so we use them to our advantage. Okay, knowledge is power. Look at this beautiful trade right here. The 200 is not on the screen here. It's like way above, but it's slanting down. Yeah, like you can see it barely on the tip top here, right? It's slanting down. Boom. So the last 200 candles dropping. Good. The last 50 candles, look how strong it's dropping, right? That's a strong, steep slope, which is saying that the value of the candles of the last 50 candles are dropping really hard, and you can see the 13 are dropping too. So what is that telling me? Downtrend. Okay. Now what do we have here? I enter the trade right here. What am I looking for? Sells. I'm looking for sells. Where do I need my EMAs to be? Above. I'm looking for sells. I need EMAs to be above. Don't even try to memorize it like that. Just think of wherever I need the trade to go, make sure there's no EMAs in the way. Wherever I need the trade to go, make sure there's no EMAs in the way. I need the trade to go down, so I need no EMAs in the way. What do we have here? EMAs above, EMAs out of the way, and it was clear blue skies to take off, okay? What do you have here? Look, we enter here. What did price do? It tapped the EMA one more time and then fell down. Imagine I had freaking the 200, the 50, and the 13 over here in this area. Like, like how hard that would be to pass in a beat? No. EMAs are out of the way. Okay. What do we have? What do we call that? An EMA alignment. When all the EMAs are out of the way, that's EMA alignment. EMA alignment. We need the EMAs to EMA alignment. We need the EMAs to be out of the way. Every trade that I take has EMA alignment. We need every freaking EMA to be out of the way, because I do not want to take a trade and I have to fight an EMA. EMA alignment, EMA alignment, EMA alignment. We can go far back. I didn't have EMAs. Look, I didn't write it down here yet, but this is EMA alignment. But looky here. This is when I started writing down EMA alignment. October 16th. It's freaking December 2028. December 28th, sorry. And like we have not lost since October 16th. EMA alignment. EMA alignment. This is what changed the game. EMA alignment. EMA alignment. This trade, oh, right here, EMA alignment. Wait, did I highlight that? So this one doesn't have EMA alignment, okay? Look what happens. Look what happens when you don't have EMA alignment, okay? So you enter the trade. I think we entered the trade right here, and we went for sales. Stop. We entered the trade right here. Get out. Get out. Go. Go. Get out. Scissor. Go. We entered the trade right here for sells, and it went down and sold, right? But are the EMAs aligned? No, the EMAs are not aligned. If I'm looking for sells, I need the EMAs to be above. Okay, we just took this trade because it made sense, like logically, but do not go against the EMAs because you are lessening your chances of winning. That's just 100% fact. Okay, EMAs are below, and I'm going for sells. That means I'm going to run into EMAs to hit TP. We do not want to do that. What we want to do is have the EMAs aligned. What do? We broke through the 13 EMA, but the 200 EMA was still in the way. And look at how they're sloping up, sloping up, sloping up, sloping up. So it's an uptrend, but I'm looking for sales. So I just took this trade because it was a 4-hour fair value gap, 15-minute fair value gap, market maker model. We'll talk about that. My dog. But EMAs are not aligned, and I didn't write it down. EMAs are not aligned. Okay, so that was a risky trade. I don't even know if I took that one. Um, but look at this. EMAs are aligned. What do we have here? The 50 SMA slanting up, the 13 EMA slanting up, and a 200 EMA, boom, starting to curve up, starting to pop up. What am I thinking? Uptrend. Okay, now what do we have here? I enter for buys. What do I need for buys? The EMAs to be out of the way. 13 EMAs underneath, the 200 EMAs underneath, 50s underneath. They're all curving up. Bam. What do? Enter. There's nothing stopping us. There's nothing in the way. There's no EMAs in the way. And this is how we trade. This is very kind of spaghetti. See, this is risky right here. Spaghetti. See how it's kind of going through? See how the EMAs are kind of close around here in the same amount? And look what the candles are doing. Up, down, up, down, up, down. Imagine you take a trade and you might not win. So you have to be careful. You know, we took this trade. We ended up winning, but it was risky because the 200 was very flat. The 13 is kind of, it's not bad. The 13 is always going to look kind of spaghetti. But stop. But the 50 is kind of, they're all tangled, dude. They're all tangled. Look at the difference between this. Look at the difference between this screen right here, and look at the difference between, like, my favorite ones are like this one. They're not tangled. They're spread out and out of the way. Okay. Look at these beautiful ones right here. These are my favorite ones that we've taken so far. It was during the government shutdown. This one, oh my goodness. Look at this. EMAs are out of the way. EMAs are underneath. I'm going for buys. EMAs are underneath. There's no spaghetti. They're not all tangled, going in and out of each other, freaking up and down, blah, blah, blah. Sloping up, sloping up, sloping up. They're like fanning out, like fanning out. Okay, that's what we like to see. So what are we thinking? Uptrend. So what am I looking for? Buys. Okay, what do we hit? A 4-hour fair value gap, 15-minute fair value gap. Boom, we over here break out, invert a 13 EMA. We'll talk about invert a fair value gap. Let's go for buys. What's most important? The EMAs are out of the way. The EMAs are aligned. Last example I'll show you here. Same thing here. What do we have? EMAs are sloping up, bang, 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 like this. Okay, 13 EMAs, saying the last 13 candles is, look, you can see the dots here too, actually. Dot, 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 dot. What is that saying? That the average of the last 13 candles have been going increasing in value. One here, one here, one here has been increasing. Okay, what do you have here? The 50 SMA. The last 50 candles has been increasing in value. What is that telling us in our brain? That we're going up. The price is going up based off the last 50 candles. And the 200 EMA is slanting up, which is telling us the last 200 candles, based off the last 200 candles, the value of the price has been going up. So with that in mind, I'm thinking uptrend. Also, we have a 4-hour fair value gap that we're coming from, and a 15-minute fair value gap that we're coming from. Okay, so what do we do here? We do an inversion fair value gap. Let's go for buys. Bang. What's most important though? Not the inversion, not the 4-hour, not the 15-minute fair value gap, nothing like that. What's most important is that the EMAs are out of the way. Out of the way. I'm going for buys. The EMAs are out of the way. I'm going for buys. The EMAs are underneath. If we're looking for buy setups, the EMAs need to be below. If we're looking for sell setups, the EMAs need to be above. Okay. So we're doing really good. If you made it this far, I always say this, but give yourself a pound on the back. Okay. Um, we're almost there. We have about, I say, 2 more videos for you to know the strategy completely, and then we'll have about 1 or 2 videos on how to trade, and how to set up a paper trading account, a demo account on TradingView. Okay, how to set up your colors, like a little tutorial, because I've always tried to show people how to use TradingView, and it was never easy. And I would try to watch videos and they all suck. Okay, so I'm gonna make the best TradingView video for you guys, so you guys know how to enter trades. Okay, this is an A to Z from the history of how of trading, the history of it, how it even came to be. Um, how and then all the way to how to execute and press buy and calculate your trades, and then everything in between, like the strategy. Okay, the next video is going to be about extra ICT concepts like SMT, which is going to be important. um Macro time frames. Okay, market maker buy model, market maker sell model. um and there might be some 1 or 2 other things, but um just little extra additions. Okay, this video right here is pretty much the last video that you need to know of how to trade. Okay, because what we use every day is the fair value gaps, we use liquidity, and we use EMAs. Those are the 3 things, so you know that stuff now. Okay, you should be able to tell me what a fair value gap is, what it looks like. Okay, you should be able to tell me what an inversion fair value gap is and what it looks like, and you should be able to tell me what liquidity, where liquidity is, and what it looks like, and you should be able to tell me, a 13 EMA, 50, and a 200. If you don't know, rewatch them. Okay. Um, when I ask what a fair value gap is, I don't need the whole history. I don't need like the simple, the real definition. I need you to be able to tell me what it looks like on the charts. Okay, because it's gonna be important. I need you to be able to tell me what an inversion fair value gap looks like. I need you to tell me where liquidity is and what a liquidity sweep looks like when it sweeps itself. Okay, and then EMAs. I just need you to be able to just know what the EMAs look like and what's important. When we go for buys, they're out the way. Okay, when we go for sells, they're out the way. So, it's a lot of information. Take your time. Don't rush it. If you're one that could binge watch it like I used to be able to just binge watch videos all day and then write down the notes, and I would sleep on it and then understand it. Okay, rewatch these as many times as you need to. With GNS, the goal is to give you structure to cut your time in half. Okay. Um, Trading doesn't have structure, which is why it takes so many people so long and why so many people fail, because they don't have a structured curriculum. They don't have a teacher telling them, hey, watch this video, watch this video, watch that video. Most of the people on Discord already have a huge Discord, already have a lot of people in them. They don't have the time to hold each other hand. They just live trade, and if you sink or swim. I'm live trading. Take the trades with me. Learn yourself. Ask the classmates. But this is like an A to Z. So I'm trying to give you structure, but you have to use it. So watch the videos on the Discord, watch the correlated videos with the Discord, write down notes. Like if you're going to college and it's taking you 4 years to go through that stuff, like I'm just you could learn this stuff in a week if you actually apply yourself though. Okay, so I'm going on a rant, but like seriously, don't try to rush it. You're not gonna make money freaking right now. Mondo's my best testimonial. He learned this strategy and the system in 1 month, but it took him 4 months to get a payout. Okay. But the point is that we're cutting your time in half. What it would take you to go somewhere else, it would take you a year. It took me, I told you every time, 4 years I've been trading, and a year and a half I've been making money. Okay. So it took me what is that? 2.5 years to actually start understanding and making money, getting funded, getting a payout. So if I had something like GNS, it would have taken me 1 month. It would take, well, maybe it'll take me 4 months. It took Mondo 4 months. So don't rush the process. Next thing you'll know, you'll be funded. Next thing you know, you'll be getting payouts. Next thing you know, you'll have 5 accounts. Okay, just watch these videos and watch the correlated videos with it. Okay. Um, Next video is gonna be, like I said, about ICT concepts just a little bit more, like SMT, what that means and all that. And then the next video after that is going to be the entry model, the secret sauce, the AP model, how we make money, and just examples and examples and examples and examples and examples and examples and examples. And now we're going to start hammering in your head, okay? And then the last video would be how to enter and execute these trades on TradingView. Because I could tell you how to do it, tell you this is what we look for, tell you how to trade, but then I tell you to enter on TradingView, enter the trade on TradingView, you're not going to know what to do. Part of trading isn't not only knowing the strategy, but how the hell do you even use a website? Okay, how do you even sign in? So we're getting there. We got I'd say three more videos left. Okay, so good job. Welcome to GNS. Grind never stops. Let's go.